Welcome back, and you're watching Market Fatafat on ET. Now, this is a show where we get you all the stocks that are buzzing in trade, either on the back of news flows or technicals. Let's keep it going with the stock journey, and on the technicals, now we're joined by Aamar Singh, who's from Angel One. And Aamar, a very good afternoon to you. On the first stock that you're going to talk to us about is PTC India. This one is buzzing in trade today. Last 1 week, 21% gains already that we're seeing coming in. Even in the last 1 month, it has seen almost 40% gains. How much more upside is left for this, and what would be the target price that you would give for this?
Yeah, thank you. So what we are seeing in PTC India is that the stock has breached a crucial zone of resistance. So earlier it was not able to reach the 9,500 mark, but that was taken out on heavy volumes on 29th of May. And post that, we are seeing a sharp up move in the stock. The stock is up by almost 10-12% from the 100 levels. And technically, if you look at somewhere around 115 is a level to watch out for, immediate zone of resistance. So if that is taken out, then the stock is headed higher towards its all-time highs of 140. So prior to that, it will have some resistance around 120, 125. But overall, the stock is in a strong uptrend. And even the intermediate term trend and the long-term trends continue to be very strong for the stock.
All right, moving on, let's talk about NMDC Steel, Ashesha, and why is this one in the spotlight?
Well, yes, the stock is with gains of over 1.5%, and this is on account of some news with respect to its divestment, whereby the government is looking to sell stake in the company. Reports now suggest that the government is likely to invite financial bids for privatizing NMDC Steel only after commissioning the blast furnace of the company's steel plant in Chhattisgarh. Reports also suggest that the value of the company is expected to go up once the blast furnace is commissioned, and that is the reason the government is likely to wait for some more time before it decides to privatize NMDC Steel. So on the back of this news that has come in, the stock is buzzing in trade today. It is off the highest point of the day, but despite that, sitting with gains of over 1.5%.
Let's move on and talk about GMR Infra. What's the news flow here today, Harsh?
So you have the traffic volumes coming through for the month of May, and you can see that the passenger traffic volumes have gone up by 4% month on month, solid 27% year on year for GMR Infra. And with regard to aircraft movements as well, we're seeing a 1% uptick month on month and 15% uptick year on year. Mind you, within the GMR basket, we're seeing good traction more from the Indonesia and Philippines market, where Medan and Cebu have contributed a very solid 8% uptick and 12% uptick respectively with regard to month on month with regard to their passenger traffic. And we're seeing both those also contributing well, 11% and 10% respectively to the aircraft movement. So within that GMR basket, domestic contributing slightly on a poor note, whereas we're seeing good traction from international rather than domestic. So on the back of that, you can see GMR slightly soft, was up earlier today, but slightly soft as the day has progressed, in line with the markets though.
Okay, let's move on and talk about L&T then, and why is this one in focus? Obviously, we did see some bit of an order that came in on Friday, I think post-market hours. And now we have a note that is coming from Macquarie, where they're maintaining an outperform rating on L&T. After the specialties coming in, after L&T was declared as the L1 bidder, the lowest bidder to construct a 135.45 kilometer package C3 of a 508 kilometer Mega Mumbai Ahmedabad bullet train project. Now, L&T's bid value was around 15,700 crore, which makes each one of its largest order wins that L&T could see in FY24. What Macquarie is highlighting that why is this important is because including the C3 and package, L&T will be constructing 92.5% of the India's first high-speed rail project, that is Mumbai to Ahmedabad bullet train project, at a total order of at a value of around 50,400 crores. L&T has also won additional orders from the bullet train project previously as well, and the order win is a key positive for L&T, given that recent narrow misses on a few large orders that they had. So yes, keeping an eye out on this one. So far, Q1 FY24 has seen a strong start to the order inflows for L&T, and that is what is keeping Macquarie positive on L&T as well.
All right, let's move on and let's talk about Manappuram Finance, and this particular counter is in focus. One of the prime reason for the uptick that the stock had seen at open was the fact that the Kerala High Court has gone ahead and squashed the FIR. Remember, the FIR was the basis used by the Enforcement Directorate for investigation under PMLA, and the quashing of the same will actually significantly improve the chances of the ED case getting resolved quickly as been. Remember, the case has been a major overhang, and if resolved quickly, the focus would shift back to fundamental performance of the company. This is what the brokerages had to say. On the other side, on Friday, you had the RBI that actually imposed a fine of about 20 lakh rupees for non-compliance with certain provisions, and the RBI action is based on deficiency in the regulatory compliance during FY21 annual inspection. The RBI made observation on loan extension given to existing customers and alluded to the evergreening of accounts. The management was also served show cause notice, and hearing was ongoing with the regulator. So now RBI has imposed a penalty for the regulatory non-compliance of non-classification of certain overdue accounts as NPAs. And also non-compliance of mandated LTV of 75% on certain accounts during FY21. Two news pieces, but the one that actually had a good impact on the stock was the positive news flow that the Kerala High Court had squashed the FIR.
Okay, surely keeping an eye out on that one. Let's move on and talk about Cochin Shipyard then. And Aamar, this one is buzzing in trade today, last week. And seems like again it's picked up that pace in the last 1 month. What are the charts indicating for this one? What is the target price for this?
Yeah, I would say that Cochin Shipyard, if you look at this particular stock, what we've seen that the stock rallied earlier towards 560 odd levels and then corrected to around 450. Again, it's back and it's close to the inching towards the 600 mark. So technically, if you look at on the long-term charts, I'm talking about the monthly and the quarterly charts, they clearly show that the strong uptrend remains intact. And what we've seen that the stock breaching the 580 levels, because 580 was I would say some sort of resistance where the stock was meeting with. So that has been taken out, and that also what we're seeing is that the volumes are significantly higher over the last few trading sessions, 8 to 10 trading sessions. So that really shows that the upside is there intact. So sustaining above the 580-600 mark, the stock has a potential to rally towards its all-time highs, which is close to 700 levels. So any dip in the stock can be used as a buying opportunity. Now the stock has formed very strong base around the 480-500 mark.
All right, moving on. Ashesha, you spoke about Jindal Steel and Power. Now it is Jindal Stainless. Similar news peg or different?
Well, yes, it is different news peg. In fact, some positive news coming in which could probably help the company increase its exports in the near term. UK government is all set to remove CVD or the countervailing duty of up to 4% on stainless steel bars and rods that are imported from India into UK. JSL is largely a flat stainless steel producer and therefore sentimentally positive for the company as well as for the sector. This news is the reason why the stock is buzzing in trade today. It is off the highest point of the day, but as you can see on your screens, the stock is sitting on with gains of nearly 1%.
Okay, let's move on and put the focus on CIE Automotive on the charts. And what's the word on this one, Aamar?
That if you look at this particular stock, we've seen the stock in a secular uptrend because the stock has been trading very firm, and on the long-term charts also there is no, I would say, decline in the bullish momentum. So it clearly appears that the bulls still have an upper hand. Yeah, on the daily charts, we did see some decline in the momentum, but the long-term trend, the intermediate-term trend continues to be very strong. The stock is trading at record highs, I would say. So I would say that any dip can be used as a buying opportunity. On the upside, the stock has a target of 545, 550 in the short term.
All right, moving on. Harsh, PNB Housing, why is this one in the spotlight today?
Well, yes, they're going to consider a fundraise, Cheryl, on the 22nd of June. The board is going to meet up for fundraise plans. 5,000 crore is the number which they're looking at, and NCDs is what they're going to be issuing. Now, in terms of what positive this unlocks, of course, it's a big positive because that shows that the management is confident of growth within PNB Housing. Mind you, the stock is up 23% over the last 1 month alone. It's very solid gains also being clocked in by the stock over the last month or so, and growth plans seem to be underway, it seems, which is why the 5,000 crore fundraise would be coming through. We did hear from HSBC with regard to the NBFC sector and how it's buzzing, and this could be one of those candidates which which could be looked at with regard to its growth going forward, and a fundraise signs off on that. So 22nd of June board meeting for NCDs.
Okay, surely keeping an eye out on that date. 22nd June is what we'll be watching out for PNB Housing as well. Moving on to stock number 25, Aamar, you've picked out a name from other FMCG space. While obviously the Nifty FMCG index has been the best performer in terms of YTD and has seen a good run up in the last 6 months, what is Emami Limited expected to do now? Because that is not something that had actually seen a run up with the FMCG pact as much.
Yeah, you rightly nailed it well. So what we've seen in Emami is that Emami has corrected significantly from almost 520 levels if we go back and see. So in September it was around 520, then it came down as low as 340. And currently what we are seeing is that we are seeing some pullback in the stock. And the stock is trading around 416, 417 odd levels. And the interesting thing is that if you look at the volumes data also, that also has been very high over the last 4-5 trading sessions. So clearly shows that there is some renewed interest which is coming up in the stock. The stock has one crucial zone of resistance, I would say. So that's somewhere around 420, 425 odd levels. If that is taken out, then the stock has the potential to rally towards 445, 450 in the short term.
All right. Moving on then, Vinny, you have the NBFC space that has been in focus, but primarily it's the 5-star business. That particular counter is in focus, and also the stock saw a good uptick in today's trading session.
Absolutely, NBFCs and especially 5-star, we have a separate note that is coming from Nomura, and this is why they're actually initiating coverage on 5-star. What they're seeing in terms of this, that they've initiated coverage with the buy rating, given a target price of 750 rupees per share. They see it as a highly profitable and amongst the fastest growing NBFCs in such a niche market, especially the large untapped opportunity with the limited competition to drive 30% AUM growth is the word coming in from Nomura. Furthermore, they also say that the multi-layered underwriting driving superior asset quality for the company and the superior growth and best-in-class profitability among financial peers is something that could work out well for 5-star, and that is what is keeping Nomura positive as well. Uniquely positioned is what they are highlighting, and the word coming in from Nomura for 5-star, and value premium is to sustain. So yes, keeping an eye out on that one. The risk that they highlight is the rising competition from fintechs and lenders. That is only a risk that is coming into factor. But look at the up move that we're seeing in 5-star today itself. It's up 6.8%, still far off from that 750, which is the target price for Nomura.
All right, moving on, Aamar, let's talk about VIP Industries. This one has had a good run ever since the last 3 months, because if you look at the YTD performance, they've done absolutely nothing. Where do you see VIP Industries headed from here on? Do you see further scope of upside?
I would say that VIP has been on a slow and steady pace, I would say, after the sharp correction which had witnessed. And from almost 550 levels, currently it's around 654 odd levels. So technically, I would say the long-term charts, I would say monthly charts, clearly they point towards more of consolidation. So what it effectively means is that the stock, if you go back and see on the high that which it had made on 16th of May, so that was somewhere around 650 odd levels. From there, the stock did correct to 600 and then again is trading above the 650 mark. So that shows that the stock is trying to reclaim its level. So 650, 660, that's a crucial zone of resistance for the stock. Taking that out, consistently sustaining above that level, then the stock has the potential to rally towards the 695, 700 levels, because volumes are also quite supportive for the stock, what we can see over the past few trading sessions.
All right, moving on, let's talk about Shri Properties, and this one is in focus because there was a news article that featured in a PTI, and as per that, the Shri Properties Chairman and Managing Director M. Murli highlighted that the company has achieved a 25% growth in sales booking to touch an all-time high of about 1,846 crore rupees last fiscal year, and this is on higher volumes and better price realization. They also said that they are looking at about 20% growth in volume terms and 25% growth in volume terms, and this in FY24. They are saying that they're going to invest 750 crore rupees on an ongoing project as well. This is so for ongoing and new residential projects, and they're looking to scale up business. This is on back of the strong housing demand that they are witnessing. This is one of the reasons why the stock is in focus. They also said that last financial year they had spent 500 crores. And this year they will be aiming at 750 crore rupees, and this will be mostly in existing projects and some of the new ones which they are looking to launch so far. They said that so far they've delivered about 36 projects in Bengaluru as well as Chennai, and they're developing 26 projects phases and another 25 projects in the pipeline. So really healthy commentary coming in from Shri Properties management, and on back of that you can see the stock also seeing a good uptick of about 9%.
Okay, let's move on and talk about ICICI Prudential, because this one has surely seen a very good uptick in the last 1 month, last 6 months when you look at it in terms of performance. Amar, at the current price, would you still suggest a buy, or maybe one should look at booking the profits for this one?
I would say that if you look at ICICI Pru, what we've seen that the stock witnessed a significant correction. So from almost 700 odd levels, the stock came down to as low as 400. Currently, it's around 540. So from the lows, we've seen almost a 35% rally. Now, what we're seeing is that there is no immediate zone of resistance for the stock. So if the stock has a resistance zone, that's somewhere around 570, 580 zone. So that's a level where one can look at booking some profits, because if it's able to sustain above the 575, 580 zone, then the stock could rally higher. Otherwise, we could see the stock in for some consolidation. As far as on the downside, the stock has now got very strong support coming at around the 440, 500 mark. That's a zone of support for the stock, major support, 450 to 500 zone.
All right, moving on. Shesha, MOIL, why is this one in focus today?
Brokerage houses met with the management of MOIL, and on the back of that we have several brokerage reports that have come in. First up, management guided for volume growth of about 20% over the period FY 23 to 25. As far as cost of production is concerned, it currently stands at about 6,900 rupees per ton, and the management says that the cost of production is expected to normalize to about 6,500 rupees per ton in FY 24. As far as wage revision is concerned, next wage revision is likely after a period of 10 years, and hence absolute cost of wages are expected to remain stable from here on. Considering huge export dependence that we have currently, the management also sees a lot of opportunities going forward to increase production from here on. They do not see any difficulty in getting mining lease approval, and most of the leases are till 2040-50 without any royalty that is to be paid by the company. Dividend distribution was about 30% last year, and they say that the balance 70% was used for growth prospects. So positive commentary coming in from the management, strong volume guidance over the next 3-year period, and as far as costs are concerned, they too are expected to remain stable. On the back of this note that has come in, the stock is buzzing in trade today.
Let's move on and talk about strides on the charts then. Amar, what's the view on this one for you?
This is one stock which is now really gearing up, and we've seen the stock rally from almost 250 odd levels. Currently, it's around 423 odd levels, and what we've seen that the stock breaking out of this zone, which was around 380, 390 zone. So that's taken out, and the stock is sustaining above that level. So the stock, for any further rally, it needs to sustain above the 425, 430 mark. Then it has a potential to immediately rally towards 460 odd levels. And on the downside, the stock has formed very strong base around the 385, 390 levels. And the monthly charts are also starting to look, I would say, positive for the stock, because the stock was in for consolidation for many months. So we are seeing a breakout there as well.
Moving on, Harsh, let's talk about Hero MotoCorp. Why is this one in the spotlight?
Well, yes, so last week ET had reported that Hero Moto was under observation from the MCA, which is the Ministry of Corporate Affairs. They had ordered a probe with regard to a breach of corporate governance norms, as well as questions relating to beneficiaries of linked entities of Hero. And on the back of that, now Hero Moto has come out and confirmed that this particular news piece is true. And on the back of that, you can see stock is down around 2% in trade today. Some amount of negative coming through on the back of this particular confirmation coming in from Hero Moto.
Okay. Let's move on and talk about all the NBFCs. Like Sharon was mentioning, the whole pack is in focus today, and we're seeing all of them buzzing, and a lot of brokerage notes have come in. Now, HSBC have come out with a note on the NBFC pack. When you look at it, what they've done is they have upgraded Manappuram Finance to a buy from a previous hold. They've hiked the target price to 60 rupees per share from previous 270 rupees per share. Bajaj Finance too, they're maintaining a buy, but they have hiked the target price here to 8,280 rupees from previous 7,070 rupees per share. Cholamandalam Investments also, they've hiked the target price to 1,340 rupees per share. Similarly, they've hiked target prices for NBFCs like Credit Access Grameen, L&T Finance, SBI Cards, LIC Housing as well. Now, what they see is that, they've said that yes, the NBFCs in their coverage have seen a run-up in FY23 from lower rates, but they believe that there is a stronger growth outlook as well as a margin outlook for NBFCs, and they believe that this outperformance could actually continue as EPS CAGR divergence versus banks could be seen as well. So yes, that's the reason we're keeping an eye out on this whole pack, and we've seen that up move especially coming in for M&M Finance, Bajaj Finance, Credit Access Grameen, all these buzzing in trade today.
Alright, let's move on and let's talk about another financier then, and that is gold loan financier, Muthoot Finance. Aamar, where do you see this one headed on the charts?
I would say this stock has also witnessed a recent rally from almost 950 levels, currently around 1180. And technically, I would say it's strong on the charts, but it has a crucial zone of resistance somewhere around the 1200 mark. So what we'll witness is some profit booking coming around those levels. Because if the stock is able to sustain about the 1200 mark for a couple of days, then the stock has a potential to rally towards 1250, 1260 odd levels. Otherwise, the stock would tend to consolidate. As far as on the downside, the stock has a major support coming at around the 1140, 1150 zone in the short term.
Okay, let's move on, and actually, Aamar, we're going to come back to you. You've picked out Sun Pharma, and this has become a favorite of a lot of technical analysts as well in the recent time. What's your view on Sun Pharma? What is the target that we should keep here?
I would say that Sun Pharma, what we are seeing is that we've seen some double bottom formation on the charts. We've seen some, I would say, respite from the earlier consolidation which it was witnessing. Also, we've seen increased volumes on the stock. The stock did rally, but then for the last few days it has been consolidating. Again today it has taken out the zone of resistance. But for Sun Pharma, for any meaningful rally, the stock needs to sustain over the 1020, 1025 mark. So if that level the stock is able to take out and sustain over that level, then the stock has an immediate target of 1060, 1070 odd levels. On the downside, the stock has formed strong support coming around the 960, 970 zone.
The take coming in on Sun Pharma, and on that note, thank you so much Aamar, Samit, as well as Ashesha and Harsh for joining us on the show, taking our viewers through all the stocks that are buzzing in trade. But we have an ET Now exclusive for you viewers, and in a major relief for home buyers and real estate sector, government has decided to complete all stall projects throughout the country. A 14-member committee representing members from the Finance Ministry, central and the state governments, as well as the heads of RERA, are meeting today to deliberate and find ways to complete the projects in a time-bound manner. My colleague Prakash is here with more details on that particular front. Prakash, take it away.
Yes, a big development coming in as a committee constituted by Urban Development Ministry is going to have an important meeting today. Sources are informing that the committee under former CEO of Niti Aayog, Amitabh Kant, will discuss various ways to complete all stall housing projects across the country that was launched before 2016. As after 2016, RERA kicks in that ensured much needed discipline in the real estate sector. The committee, which was constituted on recommendation of Central Advisory Council of RERA, will meet at 5 p.m. today, and that will be attended by Secretary, Department of Financial Services, and Chairman, Insolvency and Bankruptcy Board of India. Apart from that, Secretary MCA, heads of UP and Haryana RERA, including other central and state government officials, will be part of it. Committee will find various options to complete stall housing projects in time-bound manner. It will also deliberate legacy issues involving in a particular projects, including last mile funding requirement. Some state-specific issues involving in a particular case will also be discussed. However, government has already established Swami Fund to provide last mile funding for stall housing projects. But this new committee will make holistic recommendation considering various factors to complete all stall housing projects in a time-bound manner.
Okay, thank you so much for that, Prakash. But with that, we're absolutely out of time on this edition of Market Fatafat. It's a goodbye from Cheryl, myself, as well as the team who put this show together.